silver went up so much that Bear Stearns maybe was one of the big contributors to why they went bankrupt, because they were naked short selling silver and they got their head handed to them. Yep. And then JP Morgan took over the position.
Hello there, friends. A quick note before we get started. Just wanted to let you know that I do have a book that will be released shortly called The Big Silver Short, which digs into the silver market, the manipulation, the short paper, and features interviews with 15 of the world's top silver experts like Greg Hemke, Andrew Maguire, David Morgan, and Rick Rule. So if you'd like more information, especially if you're into silver, I think you'll love it. So click that button in the upper right. And with that said, here is today's episode. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, excited to have a good friend of mine on, James Anderson of SD Bullion, who, in addition to being a good friend, also knows a heck of a lot about these gold and silver markets. Is nice. Obviously, he sees what people are actually doing if they're buying gold or silver, which even despite today's paper market environment where the price often doesn't match what's actually happening in reality, does feel to me, I'm not trying to pump silver, get anyone overly excited, does seem like we're reaching or getting closer to some sort of resolution between the paper and physical. So we'll dig into that today. Real quick before we get started, go ahead and hit that subscribe button so you can stay posted as we dig into these markets. And with that said, James, pleasure as always to catch up with you. And how are you doing today, my friend?
Good, Chris. Thanks for having me on your show.
Well, it's a pleasure, especially because I've really enjoyed watching a lot of your videos that you've been doing over there lately. In particular, you had me smiling over here in the Arcadia cave because you made a satirical video, I guess you could call it, about Jamie Dimon and the JPMorgan appearance on 60 Minutes, which fortunately you made it really enjoyable and fun for people to watch, while also raising some really legitimate questions there.
Rebutting this over 10-minute interview's lack of acute questioning of the megabank CEO, a man who many financial experts argue is a white-collar criminal operating in open public, both Pam Martins and Russ Martins of WallStreetOnParade.com wondered why 60 Minutes never asked Jamie Dimon the following questions. Which one of these is the precious metals trading desk that was charged by the U.S. Department of Justice for having run a criminal enterprise for nearly a decade of time this past September 2019? Where's the trading desk that was criminally charged by the Justice Department in 2015 for rigging foreign exchange trading? How about the trading desk that admitted to the European Commission that it was part of a cartel rigging the interest rate benchmark, known as LIBOR? Or the trading room floor where the London whale traders blew a $6.2 billion hole in the deposits of JPMorgan Chase's insured bank by gambling in derivatives in London in 2012? These are just a few questions worth wondering as the U.S. Department of Justice continues its racketeer-influenced and corrupt organizations prosecution against now 7 former long-term JP Morgan employees, compromised of the precious metal trading desk head of JP Morgan and other underling precious metal traders.
And perhaps I'll let you take it from there and share any thoughts you have on that.
Yeah, sure. So SD Bullion YouTube channel, if you just Google search SD Bullion, JP Morgan, Jamie Dimon, you'd probably find it. I think it's got maybe 40,000 views. So a decent number of people saw it. And it basically came from, I cruise around the internet a lot looking for various subjects and things to do these videos on. And I think as I've gotten further into making these videos, it's gone from less about let's talk about today or this week's stuff going on, but more so let's talk about the big major trends, where they were and perhaps where they may be headed. And so that's, I think, a lot of what the content I've been making for SD Bullion on their YouTube channel has been lately. And this one was inspired essentially by 60 Minutes, who does no real reporting in terms of this interview with JP Morgan. There was very little learned, other than was interesting to see him walk through one of their trading floors bragging about the size they are. I mean, that was interesting. And it was interesting to see the older lady, I forget her name, but
I think it was Leslie Stahl.
That's it, Leslie Stahl. She she just looks smitten with the whole thing. Like she enjoys just being around, powerful people, and here's some softball questions, and, it's a nice little tickle interview, but there's no real questions asked. And so after seeing it, it just pissed me off. It's just like, who is this, news magazines trying to pretend like they're actually objective? Like, it's obvious that they sell advertisements to banks, advertisements to the big oil, to, military industrial complex. Like, all the major factors of how we got into this freaked up situation are the ones who basically make them profitable. And so, of course, she's not going to go in there and ask real questions. So we had to first juxtapose this terrible interview and show you this trading floor, this ridiculous situation where these people are moving numbers and getting paid ridiculous sums of money that they should not be making, essentially. If anyone had any sense in the world, these people would not make these incomes they make doing this. Versus, let's just ask some basic questions about the various frauds that have gone on over at JPMorgan and see, like, essentially the biggest fraud lately has been the Rico. That's the one that really hit a lot of silver people in the heart, because we, for the last decade, have been alleging, ever since JPMorgan took over Bear Stearns' alleged silver short position in spring of 2008, that they've been suppressing and or moving the market down or up according to what was most profitable for them, more so than even their own clients. A lot of the allegations are that they were front running their own clients.
Yep.
A lot of their clients are deep pocketed investors who ask them to, with fiduciary responsibility, to execute trades on their behalf. And these guys allegedly are just out there front running and moving the market in order to make a better bonus. And so if that's the case, if those are the facts, or if those are the allegations, why not ask that guy to his face when you have an interview with him? And so, of course, he wouldn't get asked those questions, because if he was going to be asked those questions, he wouldn't do the interview. And so at least we can sit here and verbalize these points in a video and just have average people understand why we see such frauds on television and in various places in the financial media scape. It's a joke. And so if someone can't verbalize that, at least I have the opportunity to do it. So I felt like other people might feel at least akin with that sentiment. And so that's where it comes from. It's satirical in the sense that I wish it weren't this case, but this is the case, and this is the place that we live in now. So, JPMorgan and silver, like you said, I think that things are starting to look up, especially for gold. I think this year we may even fight up to the $1,900 level and threaten the 2011 high. I'm not sure if we'll pass it. My guess is, if you look at the chart, it'll probably test and not pass it, and then we'll maybe give it another go in the year to follow. And so at some point we'll pass $1,900 gold, and it'll be interesting to see when we get toward $2,000 gold where the silver price will be at, what the GSR, what the gold silver ratio will be. It'd be hard pressed to think it wouldn't get below 60 by then. So, and right now the gold silver ratio is like 85. So, I was writing this just today about platinum and how cheap it is, and silver. Those two metals are just, when you look at the four major precious metals, palladium is obviously, seems like every week almost, it's hitting new record nominal price highs. I'm of the opinion, before this entire precious metals 21st century bull market, some people can argue that it's been a bear market for the last 10 years for sure. But I just think in general, 21st century, this is the biggest bull market we've ever seen for bullion. And eventually, before it's all said and done, you're going to see, I think, all four of the major precious metals consistently near or hitting record nominal price highs within a short time frame of one another. Something similar to what we saw in 1980, where silver and gold peaked in January, and then palladium and platinum peaked, I believe, in March or April, just a few months following. So palladium is the first here to break out of this. But when you look at the technical shape, the long-term technical shape of these four major precious metals, gold is starting to go and move up its bowl. And silver and platinum are just barely starting up, right now. And so, when you look at these long-term charts, it's the potentiality of both silver and platinum to really play some catch-up here is there. And that's why when I look at the metals complex, I think silver and platinum are really attractive if you have a high time horizon that's 5 years, 10 years, even more perhaps. I've talked with various commodity traders and people who are pretty intelligent, commodity investors. And sometimes they'll say, this could stretch and take longer, and it has already, because of all the interventions that the financial powers that be keep doing, like the repo loan market, things like that. I mean, if that wasn't going on, could you imagine what would be happening right now in the financial industry? We would be back at a place where people wouldn't be loaning to one another. They'd be freezing up. It would be similar to 2007-8. So,
which we may not be far off from, given that we have repo lines going in every day. And
yeah, because in 2007, that was one of the first things that started happening. They started doing the repo loan then, and they did repo loans right before the .com bust. And the sheer volume and size of the repo loans now are they dwarf either of those past scenarios, and they're usually just obviously a precursor to some new crisis that comes along. And so, for people to get complacent out there and think that we're forever going to have stock prices going up forever and commodities are just going to stay depressed forever, and that's just the way it is, the markets are rigged, and just quit and be a loser. That's not the way I look at it. I think to be a contrarian means you have to be wrong for like 90% of the time, and then you're damn right for like 5% of it. And that damn right part of the 5% is where you make huge gains in the short time frame. And I think that's the bet a lot of people are making, including me.
Yeah, a lot of great points you mentioned there, James, especially being a contrarian, something I've been thinking about lately because I've experienced this, had a couple other people mention where they say, if I'd been a better trader, I would have sold at the right time. Although when you factor in, if you're of the school of thought that actual money management and staying in the game is a big part of it, maybe capturing 50% of a big move is actually a real win right there. Maybe we're not meant to, it's kind of hard to get 100% of something every time. And in terms of the metals, another thing that I'm guessing you may have seen lately, which a metal that does not get talked about quite as much, maybe the fifth one, rhodium, which has been skyrocketing this year. Let's see, I'm seeing 7,300 today, really spiked at the beginning of the year. And there where I don't believe there's a COMEX contract. Do you follow rhodium at all, James? And
Yeah, I've done some research and writing on rhodium in the industry, and rhodium is interesting metal that's used a lot in auto catalysts, comes out of the same region generally as platinum, in terms of Zimbabwe and South Africa. There's a lot of rhodium mines down there. And yeah, like you said, it's not an IMEX contract. There's no derivative contract. There's no COMEX contract for them. So it's what you see in terms of rhodium price history from like the 1990s to today. I think there have been 3 major spikes in terms of in the early 90s, there was one. Then I believe in the early 2000s, there was another. And then right now we're living through another. And every time precious metal, rhodium is essentially it just goes on like an exponential curve like this, and then it comes crashing down.
Yep.
And we're in one of those places again where it seems the price is starting to run and people are betting it higher and buying it to go higher. And then eventually at some point it'll come back down to earth. But it is interesting to see. I think when there's not a derivatives market like there is in the other 4 major precious metals, what you end up seeing is a little bit more volatility in terms of the ability of a precious metal market to spike and dive more so than they do when there's derivatives involved. And that's what we see, I think, with rhodium, is the fact that it's just much more volatile in terms of upside potential and downside potential. I mean, there's times where it goes down 90% because it went up exponentially high to $10,000 an ounce. Then floors for a year and goes back to $1,000 an ounce. This has happened before in history, and quite likely it'll probably happen again.
Well, that raises an interesting question that I'll bet folks perhaps think about, or maybe would be well served to think about, because where I got myself into trouble in 2011, again, was trading equity options at the time. Been by then about 2 years since I got into Austrian economics. And it's like, how do you balance? Yes, there's an ebb and flow to markets where they go up, they come down. Yet on the other hand, again, maybe I was a little naive going into it. And I think sometimes when it's like when you actually can start to grasp that, you forget about all the Wall Street jargon for a while and you're like, geez, the deficit crossed 22 trillion. I don't know if we're at 23 trillion. You add in 200 plus trillion of unfunded liabilities. Fed can talk all day about how they have things under control. In the end, Ben Bernanke's circle of virtuosity that he discussed in his op-ed, we're still waiting for. So I was thinking in 2011, geez, maybe we're finally at the end of this fiat currency, which I know is, if you're at this point in time, you've lived through 40, 50 years of seeing the dollar. So on one hand, for a lot of people, it's hard to comprehend that we see an end to that. To me, there's some point at which the price doesn't come back down. But how do you factor that in with, I don't know, maybe that's 5 years, maybe it's 50 years. So anyway, long question. I'll stop and let you take it.
No problem. I've written a bunch of times about prudent bullion allocation. I think you and I are probably, we're probably people who can preach something like that, but we don't even take our own advice. We probably have way more bullion in our investment allocation than we probably should. But at this point, it's one of those things where it's been so long, you just kind of like, I'll just see this out, and then I'll start reallocating into other asset classes when it's all said and done. But my bet's been placed, and I still feel pretty bullish about that bet. So I think it's a question of perspective. I mean, I lived through 2011. I bought precious metals, a couple cases, of Silver Eagles. I bought a case of Silver Eagles for over 20 grand once. So, I look back at that, and yeah, at the time, if you had talked to me at the time, I think what I didn't understand completely and what I didn't grasp fully, it was just how important the US dollar is to global trade, how dominant it truly is, and how there are like no options in terms of anything that has the sheer size, the plumbing, the scale, et cetera, to compete. I mean, the euro is the biggest one, and look at that banking system. What a joke. I mean, they have negative interest rates. Like, what? How does that work? You couldn't have told me that in 2011 and said, we're going to have this weird situation where like all these trillions in negative interest rates, and gold and silver are going to be priced about the same that they are today in 2010 or so. At least silver. Gold's obviously up a little more, but it's pretty nutty. But the perspective, I think, is not too. I think you got to kind of try and stay in the middle ground, because in terms of like the probabilities, when you talk to people about this stuff, some people think they're going to be using their silver to buy food with, and I don't think that's true. I think that that's a possibility, but not a probability. I think that there's a possibility that we could have a hyperinflation, and gold and silver, are like one of the best things to own in that type of scenario. But I don't think that's going to happen either. Personally, I just don't think it'll get to that point. I think by the time there is a real crisis in monetary affairs, they'll have another solution come up. They'll have it ready. It's kind of like documents after the 9/11 events. It's like, oh, well, here we have this new strategy to fight terrorism with, and they pull it from a drawer, and essentially. So you can expect, I think, the same to come with the monetary system. So in the terms of all the probabilities, I'm thinking in like the fat center, 50%. What are the highest probabilities of this? And ultimately, the highest probability, I just think, is the fiat dollars. They have to devalue that by a lot coming up. And I think they're already laying the groundwork. I mean, they're talking about, I just saw today, I didn't even go look at the article, but repo is talking about, the Federal Reserve is talking about handing out repo loans just straight up to hedge funds, like in a way that it basically looks like what we're doing is we're simply nationalizing further the stock market than it already is. And at some point, Bernanke's even saying that we shouldn't take off the table negative interest rates. We shouldn't take off the table the idea of buying equities straight up outright. And look, I get it. I know exactly why they're doing it. They'll claim it's a game of national security. The median boomer has like no money saved for their retirement. And so they got to try and prop the stock market up to keep people from, eating dog food at the end of their days. But It's at the expense of young people like me and people who are younger that are watching this video. We're the ones eating dog ass, really, when it comes to thinking about, well, why do we have to pay for the problems that you guys created? Like, why do we have to sit here and have this class conflict, or this conflict not just between classes, but between ages and demographics? It basically it's a tough situation where they're basically you're basically subsidizing and taking advantage of people who don't have the power or a say yet in how things are going financially. And I don't know, just in the grand scheme of things, Chris, the main point is that I just believe that at the end, they're going to have to divide a dollar to nominally meet what they promised. And they're not going to default straight up and just not deliver what they've promised nominally. They'll do whatever it takes to nominally meet it. The other question is, what in terms of value will it be worth? And I don't think it'll be worth as much. Certainly not that it's worth today. The fact that you can, Apple's stock is trading at $400 a share, and Tesla's over $400. It's just unbelievable.
James, Tesla's now over 500. It's like Arctic.
It's like there's like a hyperinflation going on in the stock market. Like, what in the hell? It makes no sense. And I mean, 5-10 years from now, people will look back and be like, what was going on? But now, sitting in the looking glass, it seems like this is normal. This is perfectly normal. This all makes total sense. But I don't think that'll be the case later. And so I move accordingly. I just basically place my bets and do my work accordingly, and try to at least stay somewhat grounded in reality and in historical valuations.
Yeah, that makes a lot of sense. Something you mentioned in there that I'd like to highlight, if I may, because I know you hear this. I hear it all the time. I understand how people are tired of hearing, well, one day silver is going to go up, it's manipulated. But I think you really touched on it where, yeah, it has taken longer than a lot of folks thought, although you have so much dependent on this dollar reserve currency as we know it, a lot of which I would suggest is a bit nefarious and goes on against the law, that people are willing to do things, whether it's against commodity law. But yeah, that's what we're pricing, that there's a lot of, all of the money that gets spent on wars and stuff requires this dollar system. So I certainly can share and associate with people who are frustrated with the weight, perhaps saying that just maybe to explain it a little bit. Although, James, last question for you today. Could you comment at all on what you're seeing? Are people buying more metals? Are they selling more? Have we seen a pickup? Obviously, there was a rally over the summer, and now it seems like we've settled back into that. You get a move in silver, and then there comes the hammer the next day. What's actually happening on a physical level that you're seeing?
So usually what happens in bull markets, because I worked right through and invested through the 2007 to 2011 high, roughly. So you got to remember, back to 2007, 2008, you had silver and gold running higher. Gold was like $1,000. Platinum peaked at like 2,100. Silver was at like low 20s. Silver went up so much that Bear Stearns maybe was one of the big contributors to why they went bankrupt, because they were naked short selling silver and they got their head handed to them. Yep. And then JPMorgan took over the position. But I remember, seeing spot prices drop precipitously throughout the global financial crisis, and it didn't make any sense when the spot prices were falling through the floor, yet wholesale retail industry was going nuts, and a lot of the products weren't even on the shelf. You had back orders, sometimes 2-3 months, even some of these dealers. There was days where we didn't have any inventory in silver. We just had gold to sell you. That was it. So there are times where the spot price will tell you one thing, the derivatives are going this way, and the actual price for the real thing delivered right away is going up the opposite direction. So that we may see something like that in the future. I don't know. That was a very unique situation, but it's possible. But in terms of what I saw in sentiment, what you see a lot of times is smart money will come in, and you'll see like 7-figure orders from like high net worth investors who are putting bets on for instance, silver when it was back at $9 an ounce. You saw there were some pretty shrewd investors coming in and buying silver at that time because they thought it was good value. But then eventually, people don't like to buy generally. I'm talking about like the average retail first-time investor. They don't like to buy. They really, it's scary to buy when prices are going down. Okay, because nobody wants to go try and catch knives. Okay, and so what happens is people will see an investment that they're interested in, but then they almost want to see confirmation that it's buoyant and that the momentum is on their favor. And so a lot of times they'll come in and buy once it's gone up a great bit. You know, they'll see silver or gold jump 20, 30% in a year, and they'll be like, I could miss out here. The FOMO effect kicks in, and they want to get into the pool when it's warm water. And so you'll see a lot of people buying when the price starts going up. And that's what's happened lately. We just had a record day in terms of total shipments made in one day. And so what that means to me is that you have a lot of investors, maybe who aren't buying in like huge volume. Maybe they're not buying the largest amounts, but they are buying dollar cost average. Yep. And so that's a positive thing, essentially, that maybe it's not nominally the highest sales that we've had, but it is broad based in terms of how many hands and how many addresses it's going to. And so that's a positive thing. And I think that momentum, people feel it around that the worm maybe has turned here. It's taken a year or two of sideways wall of worry action, but I think with all the things we discussed in terms of what's going on in the monetary madness and the everything bubble, except for commodities and precious metals, I think that's like one of the last places people see good value, and they're coming into it in pretty good volume, even record volume for our business of late.
Yep. Well, James, I appreciate you sharing that. Look forward to keeping us posted, especially whenever things do start to really move. You were talking before about when gold hits 19 or 2000. Will be interesting to see what the paper trading, what kind of hammer is dropped then. But I wouldn't
be surprised, Chris, to see that this year. And you could see silver back at 26. 26 seems to be the number. Once you get silver running past 26, it's not going to be long. It's going to run fast. Yeah. It's just a huge amount of, it's going to be resistance. And then once you get above that resistance, as you know, it'll probably run hot. So it may not happen this year, but it's coming.
Yep. And perhaps just in closing, you can let folks know where they can find you so they can stay posted and be ahead of the curve on these things.
Sure. So sdbullion.com is the website. I do a lot of writing and video uploads in sdbullion.com/blog. And our videos, you can find them on YouTube. We have an SD Bullion YouTube channel, and you can subscribe there. I probably put a video out once a week, and I'll be doing that for the foreseeable future. So come on over and check it out.
Will do, and we'll link to that great JPMorgan video you did so people can enjoy that. James, great catching up with you as always. Thanks for making some time today. I think this will be helpful for folks, and we will look forward to doing it again soon.
Thank you, Chris. Thanks to all the people out there who watched.
So that is today's episode. I do thank you for spending some time with me and hope you enjoyed it. If so, go ahead and hit that subscribe button, and I'll see you again soon.